father wanted to exit the business, but didn't want to really give the son a business that, one, is not profitable and not really running in the manners that it should be. Almost every construction business owner has this problem. They reached to $27 million and their systems and controls were out of whack. I call it growing broke. The unfortunate part in the construction industry is nobody's gone to school in finance and accounting for construction. And these construction business owners run a very successful business, but their financials are in a mess. Once you get these financials dialed in, you could start making smarter, more financial business decisions in your day-to-day decision making.
Expert advice, practical tips, real-life stories. Have less stress, more time, and more money in your business. Welcome to the Cash Flow Contractor.
Martin, you had surgery on your finger a little while ago. What was it? Which finger? Okay, is that the same surgery that John Mateer is having?
It was my throwing thumb. No, I don't know. It's called gamekeepers, hammer finger, or gamekeepers, and it happens. Fell down skiing, and my hand went over my pole and it spread it and popped the tendon off. So thumb would go down, but it couldn't pull it back up. Not a big deal.
It doesn't sound like that's what happened with John Mateer. I'm sure you're pretty upset with what happened there.
Well, I'm not a high. Oh, what do you mean? You're not?
I'm a little like,
A little upset. Yeah. I'm not. I wasn't a Heisman contender.
Yeah, you weren't.
I'm still not.
Well, hopefully everything goes well for him, for the OU Sooners, for the listeners.
Well, it already
have any reference to what we're talking about.
I think they operated yesterday. So.
Yeah. Well, Martin, I'm really excited for this. We were going to be talking about exits, and we'll still kind of touch on that, but I'm really excited to talk about how to grow for an exit. And then WIP schedules, I think, is one that we've been trying to talk about for a long time with people. So hopefully we can get deep with our guest today. Aaron, thanks for joining the show.
Thank you.
Yeah, excited to have you on. Really quick for our listeners, tell us how you help business owners. Just maybe walk us through that process that you talked about with onboarding, educating, et cetera.
Yes. So my background's accounting and finance. Been in the construction industry for over 20 years. And in that 20 years, I've learned how to grow and scale and been part of businesses where the business owner is actually exiting the business. So of that 20-year knowledge, I put that in together. We call it financial resource optimization that Daaxit provides for our clients. And the process is we come on site for 2 days. We dive into the financials, see what's going on with the company. And the unfortunate part in the construction industry is nobody's gone to school in finance and accounting for construction. And these construction business owners run a very successful business, but their financials are in a mess. And I believe, as you put it, they do financials just for tax purpose, not for growth, not for strategic, not for cash flow management. Once you get these financials dialed in, you could start making smarter, more financial business decisions. You're in your day-to-day decision making. So just a prime example, a lot of our contractors, their financials will say that they make a whole bunch of money 1 month, and then they lose a whole bunch of money the next month. And, they're riding this roller coaster of highs and lows. And sometimes if you make a decision, I got to lay off people just because of my financials. That's an unfortunate situation. Whereas it's just that the financials are inaccurate. And, one of the things that you guys have talked about is the WIP schedule. That's one of the biggest components. So onboarding is getting the financials accurate. And then we have what we call a monthly retainer, where we continue our relationship with the construction business owner, where we actually educate them on their financials. We build them budgets and strategic plans to grow their business. And ultimately, we work with our clients to get them out of the business where, they could take a month off and the business is running without them. They're enjoying their lives more. And now they're just accepting offers and they get to play I guess maybe I say the king, but instead of begging for somebody to buy my company, I got people coming and giving me offers, and they're living the lifestyle of still having a business and being able to pick it when and how they want to exit their business.
Yeah. No, that's really good. Really big value in what you're doing, and there's a lot of need for that. I think people don't even recognize sometimes the need they have for that. So let's dive into a really cool story that you were sharing with us, and I want to go deep into this. But your last W-2 job, you were brought in as a CFO for an electrical contractor, industrial, you said, right?
Yes.
Yeah.
Yes.
So yeah, I want to hear. Tell us a little bit about what the state of the business was whenever you entered.
Yeah. So the father was looking to exit the business, and the son actually was working in the business from really he was sweeping floors when he was a kid. But the transition and plan was for the father to fully exit and the son to take over. And one of the problems that the company had, they reached to about $27 million in revenue, and I call it growing broke. So they reached to $27 million, and their systems and you know controls were out of whack. And the father wanted to exit the business, but didn't want to really give the son a business that one is not profitable and not really running, in the manners that it should be.
Can, can you break
They
down really quick when you say growing broke and you say
Yeah,
the
that's
systems were
great.
broken? Can you give some like clear examples of what that really looks like?
Yeah. So this happens so many times. There's kind of like revenue pillars out there. Like you could say 5 million to 10 million. So when you're running a $5 million business versus a $10 million business, it's a totally different business. And the business owner is just running it as a $5 million business. And when you get to that point, that business owner can't know as much as they did know at a $5 million. So you got to put pieces in places, pieces of systems, accounting in place so that the business owner still knows what's going on with the business when it's at 10 million. And those happen multiple times. So even once you get to a 10 million and you want to grow to 20 million, it's different. It's a different model. You got multiple project managers. You're not even knowing what's going on with 3/4 of projects. 20 to 30 to 50 million. There's just these milestones that where a business owner is growing the business, and then all of a sudden they're not making money because it's growing out of control, and they don't know
Right.
what's going on because the systems are not there. So that's where
Mhm.
a lot of times business owners come in and hire Daaxit, where they've grown, and I call it growing broke. They're making less money than they did 2 to 5 years ago when they were half the size.
And so what do you feel? I know that it's probably case by case cases, but what's the most typical answer? Is the answer to keep growing and pushing through so that you're not at like a break even or even like in a unprofitable? Is it to just know we need to like scale down and go back? I mean, what is the answer?
Well, I'm to your point, the answer is different with every
Sure.
contractor. But if you don't have accurate financials and accounting in place, then how do you know what to do? Like you don't know where you're bleeding money.
Yeah, for sure. What were you going to say,
That
Martin?
that is well, one thing is how do you get them to do it, right? When you start out, you said they call you. Okay, those guys already figured it out. But when you walk in, how do you get them to do it and show them ahead of time where the value is so that they're willing to make that investment in you and the time to get their books right and start doing it? Is that you finding that's easy or almost insurmountably hard? Or how do you approach that?
Well, so this is the ironic part of this problem is almost every construction business owner has this problem. And Daaxit, we built our model around this problem. So once we talk to a business owner, we do a 90-minute strategy session. And with that 90 minutes, we tell them everything that's going on with their business. And the light bulb just comes on and be like, this is what I've been complaining about, losing sleep about. And you're telling me exactly my problem in 90 minutes. And
Right.
then they're like, Well, we got the solution for you.
Right. Yeah, that's like people seldom think they want to double their sales. And I always say, why do you want to do that?
Right.
Well, I want to make a lot more money. Well, you double your sales at your inefficient operations, double your accounts receivable, double your inventory, double your equipment, double your personnel, double your exposure. And but you're saying that when you present that information to them, they jump on, they see it.
Yeah. Yeah. And again, it's 20 years of experience of living it.
Yeah.
So that's the other part of Daaxit is like all of my fractional CFOs. We have 6 CFOs. All of them actually work in the construction industry. So, that's a unique prospect that other consultants don't have.
Yeah, that's really unique.
Real quick, could you give an example of something? Tell our audience, you're doing your 90-minute thing, something that somebody can hear from you right now that would say, oh yeah, I wish I knew that they typically don't.
I would say that if your financials are on a roller coaster month to month, if you're making a whole bunch of money one month and losing a whole bunch of money the next month, then your financials are inaccurate and you need some help.
Mm.
And how does that happen real quickly? Roller coaster, typically.
So you typically have a bookkeeper, accounting person, an office manager, a controller, an accounting team that's just recording day-to-day transactions, but they really don't know what they mean.
Mm.
And that's where a CFO will come in, interpret those transactions, and actually not only do we educate the business owner, we educate the whole accounting department how to run the accounting department.
Yeah.
Mm. So I want to go back to the example that we're going through with the electrical contractor. So 27 million in revenue, growing broke. Father wants to exit the business, pass it on to his son, but doesn't want to pass on an unprofitable business or a mess and just cause a bunch of stress in his son's life. So when you came in, I'm assuming you basically went through the process that you're going through now, where you're just getting the financials accurate. What were some of the things that very specifically were problems that you noticed right away?
Yeah. So in this scenario, I think the accounting department was about 5 or 6 people, and the controller was running it. And the controller was overworked and was not really interpreting any of the data. So when the data or the financials were presented to the business owners, it didn't make sense. They weren't accurate. And something that we talked about earlier is the WIP schedule, the work in progress, is such a critical part of the construction company. And everybody says, "Oh, I know a WIP schedule. I understand the WIP schedule. We have a WIP schedule," but there's a different level of interpretation when you apply a WIP schedule strategically. And that's the part that a lot of, a business owner, they have tools on their belt and grew a great successful company. They do a great service. They do a great job. They're not a master in accounting and finance. And like we have these business owners will have controllers or accounting or CPA people that are really good in, certain areas, but strategic WIP schedule, strategic growth, that's where that business owner, they wear so many hats. If you get rid of that one hat and rely on somebody else that knows what they're doing, it helps the business owner. I have multiple business owners now that say, "Oh, I could sleep so much better. I'm spending time with my family. We pay out bonuses for the first time." Just for the fact that we just took the CFO hat out of the CEO.
Yeah. No, that's great. Okay.
Hey, just a technical thing real quick. You're talking about a controller and a CFO. Just in passing, can you define chief financial officer, controller is kind of like, what's the difference?
Yeah, good question. So a controller will manage the accounting department and will make sure that transactions are recorded. A CFO will be more of an oversight of making sure that there's guidelines for the accounting department that will present accurate financials. And then really the value of a chief financial officer is that strategic partner with the business owner. So the business owner is the vision, and then you have the CFO that can build the financial of the company to meet that that vision. So, like a CEO may want to venture off into a different industry. What does that look like? I want to do service work. Well, you got to buy vans. You're going to have higher overhead. You're going to have to charge a higher rate. A controller is not going to be like, oh, that's what you need to do to accomplish your vision. The controller is just like, hey, I entered your bills and I paid them and I invoice your clients and we're getting paid. Like I'm just reporting. The controller's reporting the history. The CFO bridges the history to the future with the business owner and the vision.
Yeah, the CFO is more of the strategy. The controller is more of the execution of like the day-to-day stuff. And yeah, okay, gotcha. Okay, excellent. So we're going to touch on the WIP schedule in more detail. I want to kind of see through this whole electrical contractor story because it is really cool what you were able to accomplish. So what was the first thing that you kind of go through? You said that you got the accounting department in order, you got the financials accurate into a place where the business owner would actually could make sense of them.
Yes.
What kind of happened from there? You were there for 4 years. What did that process look like over those 4 years?
Yeah. So once we got the financials, so it takes a lot of work to get the financials accurate. And I don't want to undermine that process, but once we got the financials accurate, then we were able to intelligently talk about the financials and talk about the growth of the business. And one area was we wanted to look into the distribution center. So we were like, okay, let's build a business model of us servicing and building distribution centers. And just for that example, I mean, you think of all the Amazons, FedEx, and Walmarts, those distribution centers. We became one of the number one electrical contractors to put those in place. We would not be able to do that if we did not have a financial plan. And
so how did you come up with that decision? Hey, we are going to focus on distribution centers. Was it that you had one and it was very profitable? Like, hey, we need to do more of these. What was it?
Yes, so we did do one, and and to your point was profitable, but the profit margins were actually less than our normal business. But we were able to figure out a way to still be profitable at a lower margin. That's not something I always promote, but we're just in in that area in the distributions, we were able to grow in 4 years, just that division, 30 million. And if you can grow 30 million and still make 10% to your bottom line, that's 3 million to your bottom line. So
right.
That would be a hard decision to make, to do a less profitable job. Again, that's not what I always recommend, but we are able to model it where that, going after this, we could actually be more profitable.
Yeah, if you got the volume in it, it would make sense. Gotcha. Okay. Very interesting. So you decide that you're going to go after distribution centers. What else is kind of going on?
So a couple things, we acquired a couple companies.
Okay.
So that was another approach that we took on. We figured, again, strategically, we identified certain clients that meet certain metrics that we knew that we could, I say, gobble up. So we could gobble up a $5 million company and put it up in our umbrella in a month or two. And all of a sudden that 5 million company is worth 10 times more just because it's part of our company and we have our infrastructure. So,
and I imagine you were buying at a lower margin. I mean, multiple, like 3 or 4.
more than
less. Oh, and then selling for 12.
Yes.
Which you didn't know for certain, but somebody had an idea, right?
Yes. Yeah.
So yeah. Oh, cool.
That's great.
Well, we're not totally talking about that, but if we have time to go back to the difficulties of acquisitions. But Khalil, keep going.
Yeah, keep going. So you're strategic on your project because you have the accurate financials. You can be strategic about what projects to choose rather than just bidding whatever comes your way. You're saying, hey, distribution centers is the model. If we can get this to, this many projects a year, then it makes total sense for us. It's streamlined. It's a large project. I'm assuming the distribution centers are a very large dollar amount per project where you can keep all your guys busy. Um, is there also kind of a maintenance or service component to those distribution centers?
Well, something I mentioned as well is like we also presented to refinery plants maintenance agreements where we would bring people on site and basically they would be their employees. And it was that, it's another model where it was a lower rate, but we had zero downtime and we had guaranteed money. And what we did is we created 3 to 5 year contracts with these plants and with guaranteed rates, which would give us guaranteed money. So even, when the economy would, the construction economy would take a tank, we were diversified and we're in these other plants. And, that helped us out in a couple of situations. But having the maintenance agreements also mean we had reoccurring money so that when we did exit the business, it was another factor of getting a higher multiple.
Yeah. No, that's great. That's great. Okay. So we've mentioned getting this higher multiple. What were some of the other things that you were thinking about to be able to get that higher multiple? You've talked about having, predictable revenue, recurring revenue from these maintenance contracts. Yeah. You've gotten a larger dollar amount of projects coming in, right? We've increased our revenue, which helps a little bit too. Not always, but if you're profitable, it's really helpful.
Yeah.
What else? What are some of the other things that you've done?
Yeah. A couple other things. One was that, we had an in-house recruiting, we had in-house apprentice program. So, as we had our growth model, we had the model to actually bring in the people to grow our business. That was a big factor. And then, the other factor is something that I do work with all of our business owners is getting out of the business. So a lot of times, you're to sell your business is going to be so much more attractive if you're not in the business running it every day because another person that's going to buy your business, maybe they don't want to be the CEO of your company or the COO or HR. You want a business that kind of operates by itself. So in this process of the business owner exiting the business, so we grew the business from 30 million to 90 in 4 years, and in that 4 years, that business owner was working 60 hours. When we were at 90 million, he would come in a couple hours a week and play around in the shop.
Wow.
Just to make sure.
And this is the son, not the father, right?
Yeah, this is the father.
The father. But the son was the CEO. What was the son doing at this point?
Yes. The son was the CEO at this point.
Okay, gotcha. Very cool. So how do you approach actually getting the business owner out of the business?
Very slowly sometimes.
Yeah.
We take steps. So we do have we have processes and procedures. Daaxit has our process and procedures in itself. So part of our budget initiative yearly goals with our business owners is we sit down with them and go through some steps of like, okay, what would it look like if we took 8 hours out of your role a week?
Mm.
And we kind of make babies and we make steps.
Yeah. What can you give away?
Yeah. What can you give away? And I have a lot of success stories, but like one that was kind of emotional to me was we had this, it was a $12 million concrete company, and I couldn't get the business owner to meet with me. And I'm like, hey, you're paying me and you can't even schedule time to meet with me to go over your financials. And when we met together, we said that we're going to bring your net income up to 10% and double your profits. And when we started talking, we figured that we had to put pieces in place for him to not work so much in the business, so I told him to add overhead, which ideally you would think would reduce your net income. So we added a superintendent. We promoted a superintendent out of the field. We got their office manager working full time. We got them a bookkeeper. And then, we were about 6 or 7 months in it, and it was like July or August, and the company was still doing good, but it wasn't hitting the 10%. And I was like kind of stressing out about it, but because we guarantee it, we give money back if they don't. And so when I talked to him, it was just right after July, and he's like, "Hey, can I tell you something?" And I was like, "Sure." He's like, "I just took my first 2 weeks off, didn't answer my phone. I've, this spring, this summer, I've been going to my kids' sporting events for the first time ever. And I have the best relationship with my wife ever."
Yeah.
So he got, super.
So
that's amazing.
Yeah.
You've got to design the business to be able to still be a present father, a present husband, spouse, mother, if you're a woman owning the business as well.
And did you get to the 10% net?
This is the kicker. This is the kicker is yes. We tripled the net income from the previous year, and we hit over 10%. So we hit our financial marks, and he hit some personal goals that he never knew that he had.
Wow, that's amazing. Very, very cool. So,
okay, real quick. Sorry, Khalil. A lot of people hear that and they go, "Okay, they believe you. I believe you. I know it can be done. I've seen it done it myself." But they want to know tell me one thing that you did that increased the net margin by 1% or 2%. One thing that somebody could go, "Oh, that's not voodoo. I could do that."
Yeah. So this concrete company, and this is what we do with all of our clients, to be honest, and we talk to WIP schedule, work in progress, and we sit down and we dive into it and we look at the jobs. And, there was a certain contractor, this one specifically, there was their number one contractor in there. That was their number one client. And we figured out that they were losing money off of this one contractor. And this took some coaching, this took some time. And he's like, "I can't upset them. I can't raise my prices." And this happens to a lot of my contractors. I got multiple stories where the contractor says, "I can't raise my prices." And, we walked them through like, "All right, let's not focus on the price. Let's focus on your value and your deliverables and say, hey," and then we pulled up the history and we're like, "Hey, we haven't raised prices in 5 years and concrete doubled it, over 2 years. Like, how can you not raise your price? And how can you, and that's how we kind of presented it with the business owner, and the business owner presented it to the construction company and they approved the price increase."
And it wasn't like a 1% price increase. Well, how much did you increase the prices?
It was substantial. I believe it was 15% on that one.
Yeah. Those guys,
and that's straight to the bottom line.
They absolutely know. Yeah. If they're above break even, it goes right. Yeah. Super. I know that people just need to that's what I've found is good books make that. You can show them why that works, and then they can maybe believe it, and then they can maybe do it. So super.
Quick ad break to tell you a little bit about OpenPhone. If you're a contractor that has a single cell phone, you're probably inundated with text messages and phone calls, oftentimes that you can't be responsive to or that you can't answer at all. So what's the solution? You can buy another office line with Verizon or AT&T, and you can have an iPhone that is passed around from employee to employee, depending on who's on call. But what if there's a better way? What if there's a way that you can have all your phone calls recorded to go back and listen to later, transcribed with summaries so that you can get a quick glance at what happened during the phone call, and even connect it to your CRM where all your other customer information is? OpenPhone is the perfect solution because it does just that. You're able to add all the users you need to for whoever needs to have access to the lines for your company phone, And then you can also find all of the information you need at a glance with a centralized location for all phone calls and text messages with your customers. Whether it's for marketing, for sales, or for service, OpenPhone is the perfect solution for you and your team. If you're interested, we have an offer down the show notes from OpenPhone. Please click the link down the show notes, or you can see it here on your screen to be able to find more information about OpenPhone. Thanks for listening. Back to the episode.
I want to pivot to get a little bit more specific on this WIP schedule. We've talked about it, works in progress. It matters. It changes the way that you view your business. It gets you off of the roller coaster financials. What is it? Can you just give us a really clear way of understanding it? And then let's dive into each aspect of how you approach a WIP schedule.
Yeah. So I tell everybody that the WIP schedule is the most complex accounting piece in the construction industry. I've had controllers left and right that don't understand it, that are making six figures. So as a business owner, I don't expect you to understand it. What the WIP schedule is, and you have to have an accurate WIP schedule. So, a WIP schedule in very basic form is your contracts, your cost, and your projected cost. So if I'm expecting to hit 30% gross profit, then hopefully that job hits 30% gross profit. 99% of the time it doesn't.
Right.
So
reality,
it doesn't. It could be because of, weather, it can be because of material price fluctuations, but understanding why you did not hit your margins, your marks, your targets is knowledge in itself. So really, I don't want to get in the nuts and bolts together, but this is one of our deliverables every month is we put a WIP schedule together and we dissect it and explain it to the business owner. So we'll dissect it in a manner where we're looking at profit margins and dollars by month, by job, but also we're able to dissect it by job type, who's the project manager. So there's different ways that we are able to dissect it. And then we already have set flags of, hey, we need to talk about this project. So we'll already dissect and do all the research of the WIP schedule and tell them what's going wrong with the WIP schedule. And then the business owner kind of has to explain it. And then then a light bulb goes in, off when the business owner has to explain it. And then, it could be, hey, these jobs we ran over on hours and let's just call it, I don't know what you want to call it. Let's just say, hey, we installed generators. I'm just making up an example. And all of a sudden we're not hitting our margins on generators, or we'll just go back to the concrete. My main client, I wasn't making money. Like he didn't know that. So knowledge is powerful. And we were able to take that knowledge and he was able to make his company more profitable. So it's the full circle of the WIP schedule, and almost nobody gets the full circle. They'll get pieces of it. And then everybody says, I got a WIP schedule. I know a WIP schedule, but do they understand the full circle? And I would say 95% don't. And I believe I've heard you guys mention that you've never seen an accurate construction financials either. So
yeah, I mean, that's my joke, but it's also mostly true. The other thing that I've noticed about WIP is it's a comparison of what you're doing, what you've actually billed. People have either over invoiced or under invoiced. Well, that inflates your profit or inflates your loss because you don't know what's right. I mean, use it that way. And Khalil, Aaron, we've got to tell you, got to go back and listen to one of our episodes with a guy named Todd Hagopian.
Okay.
Because our listeners and we have listeners that have called me and said, oh my God, he knows profitability. He's manufacturing, but he knows the profitability by customer and SKU. And he has, just exactly what you said. Your best customer is costing you money. Well, in what sense are they your best customer? Well, I can't tell them till I'm going to raise my price. I said, oh, okay. So you're going to drive over there with a pickup load of money and just keep handing it to them. You got to do it. And that clarity of numbers and a guy explaining it to him said, this isn't a choice. You have to do it. Love it.
Yeah. So I want to really help people understand and even help me understand, Aaron, on the WIP schedule. It sounds like what you're doing is you're marrying the financials with the operations and the project management in a sense that you have to have like it's almost like there's a silo sometimes of like the accounting department's in a silo and they're kind of doing their own thing. They're the only ones that are in the accounting software. They're the only ones that are reviewing financials. And then you have the project management or the operations side, and they're the only ones that know exactly what's happening today on the job site, that know how many hours are happening like today if we're going over. And none of that's really being communicated between the two, but essentially the WIP schedule is marrying those two. Am I accurate in saying that?
It is, but you have to take it to the next level. So,
Okay.
as as I mentioned before, like this is complex. The WIP schedule is very complex. Gross profit calculations are complex. A lot of times what we do is we also sit with the project managers and review the WIP schedule, because the project managers, like you said, know what's going on with the project. So the project manager should be doing monthly projections into the WIP schedule. So we have to educate the project managers about the WIP schedule and managing the jobs from a financial standpoint. So, again, there's so many things that come from the WIP schedule that helps the company be profitable. But when you have project managers that don't even know what's your overhead rates and don't know, the gross profit margins on their jobs, how does a project manager know that they're going to make money on a job, and how's the business owner know that he's going to make money on the job? So there's definitely like some education down to the operations of help them understand the WIP schedule as well.
Okay, so let's get into that. If you're sitting down with a project manager and you're trying to train them on, hey, every month I need these things from you, or every week I need you to report these things, and you need to be keenly aware of these numbers, what are the things that they need to know?
So they need to know what a costs have occurred, and they need to know what cost will occur.
Okay.
So, hopefully your accounting system will tell you what costs have occurred. And then hopefully the project manager knows what additional costs the future costs are going to be.
Okay. What else do they need to, and do you, anything more specific about costs that have occurred, like any details?
If you want to go down the details, you should know like your labor, how many labor hours you're going to have, what's your cost per labor, your material, your subs, your overhead, your burden rate. These are just some of the things that the project manager should know. But nine times out of 10, project managers don't know this because nobody told them this.
Exactly. That's what I was about to say. Like, you're talking about all these terms, and I think these are great, but these are things that I think more of maybe the estimators thinking about. And then probably more so on the business owner or the accounting side is thinking about. Am I accurate in saying that?
I would say, I'm sure you are. A lot of our clients, that the project manager is the estimator. So
okay. So you're not okay. Yeah, gotcha. Okay. We have the cost occurred. Now the cost that will occur, it's the same, a lot of the same metrics, but how do they actually track that stuff? Is that typically what it comes down to the problem of, is it's not actually being tracked regularly?
That could definitely be one of the problems. Hopefully I would say majority of the time it is tracked, but it might not be tracked accurately. But that's part of our onboarding process, is figuring out what's being done right and what's being done wrong. And then once we are tracking that, what reports can you pull out of the accounting software to give to the project managers? Because again, so this is another thing that I often see is the project financials are not provided to the PMs all the time. Like the PM should have, most of our clients now, PMs can push a button and know where they're at today. Like that's how it should, in my opinion, that's how it should be. Like PM should be able to know where they're at on their projects today. every day.
I mean, kind of oversimplified, but isn't it sort of, hey, we scheduled to spend $100,000 on this whole job. We've already spent 50, which we know from our books because the invoices are in. I got 50 left, and the PM looks at it and goes, we're we're not 50% done.
Right.
No, I mean, that's kind of what it is in a simplified way, right?
It is, but now you're halfway done with the job and you're like, ooh, okay, PM,
Yeah.
Now we've had this conversation, and there's other leading indicators that, to your example,
Yeah.
that would identify that you're behind. But like, okay, what do we need to do to change this
Right.
job to be profitable?
But
Instead
now
of,
that you know about it, you know that you need to ask that question, what can we do?
Right.
Instead of just blowing through it and wondering where your money went.
Right.
Yeah.
And
Huge.
so obviously the data for the project manager sounds like one of the biggest aspects of the WIP schedule, but I feel like there should be somewhat of a cadence of like level setting. Hey, where are we at in the project? Where are we going? Like how far are we along? How much have we spent? Where are we going from here? Like, what do you recommend in terms of like levels? I'm using that term level set, but just like a project review. Like, what are the things that you guys implement in terms of that?
so best practices is I recommend that so when we work with our clients, we have a month end close and we have a month end close schedule. So as part of that month end close, we have the project managers reviewing their jobs and updating their estimated to complete cost. So every month, a project manager is reviewing this. We even now the top of our clients, we even have what we call a project manager scorecard, where we track the project manager's profitability every month, and the business owner sits down with every project manager and say, hey, here's your month goal, here's your year-to-date goals, this is where you're at. You did really good this month, great. What you did really bad this month, what happened? Oh, you got this one project that's really difficult. What do we need to do? Do we need to change personnel, or do we need to, kind of give a motivational, what do we need to do to kind of change? So monthly is the cadence of reviewing projects from an accounting standpoint. But project managers should be reviewing them a lot more often.
Yeah. Now, what do you do? Does the WIP schedule mainly, does it give more value to the contractors that have projects that last multiple months? What if our projects typically last 3 weeks? What's best practice in that case?
I WIP schedule for everything, because let's just be so
End of the month could be in the middle of that, and then
Yeah.
you're all screwed up.
So, let's say you're doing a $3,000 job and you do 100 of them, and you're not making any money on them. That's $300,000 that you're losing money on, that you didn't even know that you were losing money on.
Yeah.
Because
So what would be the practice then if it's a monthly cadence, but my jobs finish every 3 weeks? Would you still do the monthly cadence, or would you shorten it to every 2 weeks or every week have a?
So we do it still monthly, but
Okay.
but knowledge is still knowledge. It maybe be after the fact, but you could still have that conversation.
Gotcha.
And then learn from it.
Okay. Gotcha. So still monthly, and it may be completed. You may not be updating like in real, like middle of project, but you're still going to have the knowledge of what actually happened.
Because
Gotcha.
sometimes, we catch it. We honestly catch it. Like, oh, $3,000 project. Oh, that was done 5 months ago. We're like, well, you haven't invoiced it? Like, oh, I
Right.
Yeah.
forgot.
There you go.
I forgot.
Yeah. Yeah.
Or you like, hey, that project, the price of it is 3,000, the cost was 6. Oh, I had a $9,000 change order. Like, oh, well, let's get that $9,000 change order in there. Like, those are real scenarios that we have with our clients.
Yeah. No, that's so true. Okay. Interesting. Well, what do you find is the biggest obstacle for contractors with implementing the WIP schedule, even when they are working with you?
So probably the most, probably one of the things is putting the pieces in place and having the people there to do it. We've ran into a couple scenarios, not that this happens very often, but we ran in, but it becomes a good thing. So we'll run into scenarios where, like, okay, you're doing 50% of what accounting should be doing. So to get you to the next level, you need to hire another bookkeeper. You need to hire a controller. So when we come in, we'll say, hey, these are your gaps that you're missing, and you need to hire this person. I would say that that's one of the larger hurdles that we have to put in place. But once we do hire that person, the business owner's like, I can't believe I lived without them.
Yeah.
It's usually a staffing problem is the biggest obstacle to getting there, you think?
Yes.
Yeah. Okay. Gotcha. Yeah, I would concur with that. Is they're running over capacity and they're trying to make it work, but because they're over capacity, you can't add another log on top of their back to carry. So, okay, interesting. Well, Martin, what have we not covered? Anything that we need to go in deeper?
Well, I have a little simple question. Systems, which you've been talking about, your developed systems and how that improved the multiple, and when you sold, the systems went with it. I want to know, where do you keep, how do you record, what do you do with the systems? Do you have a notebook? You got a Asana? Where is the system that tells you how to run a monthly WIP meeting?
You mean like like the software?
I mean, if that's what it is, everything you're doing is you systemize every part of the business. I'm going to presume also marketing and sales and leadership meetings and all that. Where somebody says, do you have systems? Yep. Let me see them. What do you show them?
Okay. So it depends. So every
Sure.
client, I mean, seriously, so what we do is we work. So my team is experienced enough that we are able to work with the systems that they have, and we're able to build the gap. So, a lot of our clients have QuickBooks. So I shouldn't say a lot. A handful of our clients have QuickBooks, and QuickBooks isn't a very good accounting software for construction. So we've already got a template for a WIP schedule where we could download information from QuickBooks into Excel and be able to do analysis. Talking about systems in general. So our construction companies have multiple different, I call them ERP systems, accounting systems that they utilize. And one of the biggest is they're utilizing it 75%. And if we get them to like 90%, then you could use the system that they have in-house. And it's just that knowledge on the staff to bridge the gap of, this is what we're doing and this is what I need to do, is the gap that we really educate, the accounting team, what they need to do. And then that almost creates the system in itself. So either they got the system, they're just not utilizing it, or we'll throw a WIP schedule on top of it. We have templates that we use, because this is what we do. We're very niche. All our contractors got contract jobs and they're doing contract jobs. So the model's complicated, but because we have so many of the same exact client, it's simple for us.
Super.
Yeah. Well, this has been really interesting. I don't get to dive into the financials as much as you and Martin. And so I'm always interested to see kind of what happens in the background and how valuable this information is. Obviously, you do this work day in and day out. Your entire team does with contractors. How can they get in touch with you? What's the start? Is it that strategy session that you talked about?
Yes. Yeah. So we have a website, Daaxit, Daaxit.com. They could just, fill out a form there, and we'll reach out to them, and we'll do a 90-minute strategic session. And we'll dive into their financials, and right after that 90 minutes, we're going to be telling them what's going on with their company. And just that 90-minute meeting in itself is so valuable. 50% of the time we have that meeting, the business owner's like, I got to hire you.
Yeah, that's great. And what does it cost to do the 90-minute session?
So we consider it as a no risk. It's a free session.
Oh, free session. Okay. So everybody should go and schedule this session is what you're telling me, right?
Yeah.
Okay, great. Well, we will promote that. We'll put a link to the 90-minute session and your website inside of the show notes for our listeners. And anything else that you want to tell our listeners?
I guess the only, one of our core values is education, and a business owner can't know everything. So, when you struggle, it's okay to ask for help. And if it's not Daaxit, find somebody, and hopefully that person will help you grow quicker than you can on your own.
Yeah. No, that's great. And can you tell us what Daaxit stands for or what it means?
Sure. So we were trying to figure out a company name, and of course, we're just throwing names out there. And we have a family dog. Her name is Dax, and she's a German Shepherd. And German Shepherds are supposed to be smart, loyal, family dogs. And I was like, man, that's kind of hits home about our company. And we're in the story happened a lot quicker, or the name came a lot quicker, because we were like Dax, and that sounds weird, and say Dax, that's it, Daaxit, that's it. And somehow
there you go. Stuff.
And it was done.
There you go. I love it. Okay. Very cool. Well, we talked about the Sooners at the beginning of the show. We'll wrap up. Your Purdue fan, I'm assuming, based on the I love you to Purdue and back in the background. 2-2 start to the season. Is that right?
Well, we could pass on the football. The college basketball team's looking pretty good. I think we're probably
basketball does look good.
So I did go to the national championship in Arizona a couple of years ago. Hopefully I get to go on. I think it's in Indianapolis this year. So
okay, not too far. You're in Wisconsin, is that right?
Yes.
Yeah. Okay, so not too far. Okay. Well, very good. Well, I hope that they have a great basketball season. I'll be sure to tune in for that. So great to meet you, Aaron. Thanks for being on the show. And hope to have you on again sometime.
Yeah, thank you. Look forward to it.
Take care.
You made it to the end of the episode, but before you go, if you found yourself thinking about growing your construction business while listening today, I want to share something with you. It's called our 24 Things to Hiring and Training the Perfect Executive Assistant for Your Construction Business. And it's a free guide that we've created. It's not theory. It's what we actually use to help contractors hire the perfect executive assistant. And really, we help you find ways to delegate over 50% of your current workload and get back 20 hours of your time every single week. You didn't start your construction business to just be doing admin work, to be buried in paperwork and endless admin tasks. This is the guide that shows you exactly how to find and train someone who can actually take all that weight off of your shoulders. So this is a real actionable, great PDF that has templates and processes. It's really, really great. And I want you to check it out, even just to get your feedback and how we can make it even more valuable. But I know that you're gonna love it. The link is in the show notes. Please download it. We'd love to see how much of an impact it makes on you and your business. Thanks for listening to the full episode. Check out the guide. It's free. No reason to hesitate. No reason to wait. Download it now. And before you go, I just want to ask for your gracious subscription to our podcast. So if you have 2 seconds, it means the world to us. Just subscribe on YouTube, Spotify, Apple, or if you'd like our weekly newsletter delivered to your inbox whenever we release an episode, please subscribe in the show notes. Every week, we're talking about real strategies on how you can grow and build a profitable construction business that runs without you, so you can have less stress, more time, and more money. Click subscribe wherever you listen to the show, and thank you again for checking out the Cashflow Contractor. See you on the next episode.